Hey everyone, welcome back. It's time for another deep dive, and today we're cracking open a book that's basically a treasure chest for anyone interested in the minds of master traders. It's called The New Market Wizards by Jack D. Schwager.
Oh, yeah. This was a classic.
It is, and what's really cool is that we're not trying to turn you into a Wall Street whiz overnight. We're more interested in extracting those golden nuggets of wisdom.
Exactly.
The mental models, the risk strategies, and the psychological approaches these top traders use, because believe it or not, these are applicable whether you're haggling over a salary or just trying to understand why people do what they do.
It's fascinating how these traders come from such diverse backgrounds.
Right.
I mean, you've got mathematicians, engineers,
Hmm.
even a former divinity school student.
No kidding. I'm already intrigued. Okay.
Mm.
So give us a taste of what we're in for. What are some of the highlights? We're going to hear about a guy making millions off municipal bond funds. Another one claims to use dreams to predict market moves. And there's even a trader who credits hypnotherapy with turning his entire career around.
Seriously, wild stuff.
I know, right? It's like having a backstage pass to their brains. Okay, let's kick things off with a guy who's known as the Sultan of Currencies, Bill Lipschutz. This guy made a fortune in the world's biggest financial market currencies. But here's the thing. He didn't start out as some finance prodigy.
Definitely not a typical path.
Not at all. He actually began as an architecture student.
That's right.
It was only after inheriting a stock portfolio that he found his way to Salomon Brothers' foreign exchange desk. Talk about a career pivot.
I mean, can you imagine going from designing buildings to trading currencies?
Seriously, what do you think was the click for him in that transition?
You know, one thing that really stands out in Lipschutz's story is his incredible ability to just devour information. This is the early 80s, long before the internet.
Right.
But he was obsessed with understanding the flow of information and how it impacted the market.
So he wasn't just like reading headlines.
No. He was digging deeper, trying to understand the market's perception of the news, not just the news itself. There's this amazing anecdote where Lipschutz is being interviewed by Schwager, right, like for the book. And right in the middle of the conversation, he decides to make a trade on the Australian dollar.
Wait, he's making a trade while being interviewed for a book about successful traders?
It just shows you how plugged in he was to the market.
Oh.
So the Aussie dollar's tanking after some negative comments from the Australian finance minister.
Uh-oh.
But Lipschutz sees it as an overreaction, and he's willing to bet against the prevailing sentiment because he understands the underlying dynamics at play.
So it's not just about knowing the facts, it's about understanding how those facts are being interpreted by the market. That's a pretty crucial distinction.
Absolutely. It's
Yeah.
like the difference between reading a review of a movie and actually watching the movie yourself.
Yeah.
You might get a general idea from the review, but you won't truly understand the film until you experience it firsthand.
That's a great analogy. And it makes you wonder, how often do we make decisions based on someone else's interpretation of events rather than forming our own conclusions?
All the time.
Right.
Especially in today's world, where we're bombarded with information.
So true. Okay, so Lipschutz is clearly a master of information and market psychology.
Sure.
But what about risk management? I mean, trading currencies is inherently risky.
Right, it is. But Lipschutz is also known for staying incredibly calm under pressure. There's this wild story in the book where he's on vacation, misses a call. Turns out his firm is short $3 billion on the Deutschmark.
$3 billion.
Yeah.
I think I'd have a heart attack on the spot.
Most people would. But Lipschutz doesn't panic. He calmly assesses the situation, develops a plan, and navigates his firm through the crisis.
So even when facing what seems like an impossible situation, he focuses on finding a solution, not dwelling on the potential losses. That's a pretty valuable lesson, don't you think?
Absolutely. It's about having that mental discipline to separate your emotions from the decision-making process.
Yeah.
And honestly, that's a skill that can be applied to any high-stakes situation, whether you're trading currencies or leading a team through a challenging project.
Totally. Now, that calm under pressure mindset seems like a common thread among a lot of these top traders.
It really is. And, that leads us to another crucial aspect of trading success, psychology.
Okay, let's talk about that.
One of Schwager's key observations in the book is that many traders adopt methods that are completely out of sync with their personality.
It's like trying to force yourself to be a morning person when you're a natural night owl.
Exactly. You're fighting against your natural tendencies, and that's going to create internal conflict and potentially lead to poor decisions.
So how do you figure out what kind of trader you are? What are you naturally good at?
That's where self-awareness comes in. And Schwager profiles several traders who are incredibly successful, but they each have very different approaches.
Mm-hmm.
For instance, there's Randy McKay, a futures trader who focuses on catching the easy part of market moves.
The easy part. Okay, what does that even mean?
He means identifying trends that are already in motion and riding them until they start to reverse.
Uh-huh.
He avoids getting caught up in trying to predict the unpredictable. Gets out of trades when they feel difficult, even if it means missing out on some potential profit.
So it's more about recognizing when a trade feels right and when it's time to cut your losses.
Exactly. And that approach works for him because it's aligned with his personality. He's not someone who enjoys the stress of constantly fighting against the market. He prefers to flow with it, picking his battles strategically.
It's almost like he's developed a trading style that complements his natural strengths and minimizes his weaknesses.
You got it. And that's really what we should all be striving for, whether we're traders or not. Identifying our own strengths and weaknesses is key to making choices that align with who we are and how we operate best.
Totally. Okay, so Randy McKay is all about going with the flow and avoiding unnecessary stress.
Right.
What about traders who are more analytical, more data-driven? Do they have a place in this world?
Absolutely. In fact, Schwager interviews another trader, William Eckhart, who represents that very approach.
Yeah.
He's this brilliant mathematician who sees trading as a game of probabilities and risk management.
So instead of relying on gut feeling or intuition, he's crunching numbers and looking for statistical edges.
Precisely. And he has this fascinating perspective on human psychology. He believes that our natural instincts often lead to poor trading decisions because we tend to overreact to both gains and losses.
Which makes sense. We get caught up in the emotion of the moment and make impulsive choices.
Right. And Eckhart emphasizes the importance of overcoming those instincts.
Mm.
For him, successful trading is all about developing a system, sticking to it, and letting the numbers guide your decisions.
So take the emotion out of the equation. Let logic and probability take over.
Exactly. And this leads to a really interesting question for you and all our listeners. What are your natural tendencies? Are you more impulsive or analytical? Do you thrive on risk, or do you prefer to play it safe?
Ooh, good question. And it's not just relevant to trading, is it? It applies to any area of life where we're making decisions under pressure.
Absolutely. Understanding our natural inclinations, whether they're related to risk tolerance, decision-making style, or emotional reactivity, can give us valuable insights into how we approach challenges and opportunities.
Okay. So far, we've met a trader who's all about mastering information flow and staying calm under pressure, and another who emphasizes matching your trading style to your personality and overcoming those emotional biases.
Right.
But surely there's more to it than just psychology and risk management.
Oh, there's definitely more. And that brings us to another fascinating trader profiled in the book, Mark Ritchie, a former divinity school student who found his calling in the world of soybean trading.
Hold on.
Yeah.
From divinity school to soybean trading. Now that's a leap.
It is. And Ritchie's story highlights a few key points. First, there's no one-size-fits-all path to success in trading, or any field for that matter.
Right.
And second, he emphasizes combining technical analysis with a deep understanding of market psychology and long-term cycles.
So it's not just about charts and patterns. It's about understanding the human element, the ebbs and flows of supply and demand, and those broader economic forces at play.
Exactly. And Ritchie has this great story about how he purchased what was supposed to be valuable historical data on something called perpetual contracts to help him develop trading systems.
Oh, I sense a butt coming.
But it turned out to be completely useless.
Ouch. That's gotta hurt. Especially if you're putting a lot of faith in that data. What happened?
Well, the data was riddled with errors and inconsistencies.
Oh, no.
And this highlights a crucial point. Don't blindly trust data, even if it comes from a seemingly credible source. Always be critical. Always question your assumptions, and always be willing to adapt when the information proves to be unreliable.
That's such a valuable lesson, especially in today's world where we're bombarded with information from all directions. So how did Ritchie recover from that setback?
He had to pivot. He shifted his focus from silver arbitrage to something called soybean crush trading.
Soybean crush trading. Okay, I have to admit, that sounds a bit intimidating. What exactly is that?
Essentially, it involves profiting from the price difference between soybeans and the products they're processed into, like soybean meal and soybean oil.
Oh, I see.
It's a complex strategy that requires a deep understanding of the soybean market and the factors that influence supply and demand.
So it's not just about buying low and selling high. It's about understanding the entire ecosystem of a particular commodity.
Exactly. And Ritchie's willingness to adapt and embrace a new strategy, even after a significant setback, demonstrates his resilience and his ability to identify and capitalize on new opportunities. But it wasn't just about being adaptable. It's also about managing risk. When he made this big move to soybean crush trading, he negotiated a profit-sharing arrangement that limited his downside.
Smart. So he was willing to take calculated risks, but he also had a plan to mitigate those potential losses. That's a smart approach.
Absolutely. It's about finding that balance between boldness and prudence. You want to be open to new opportunities, but you also need to protect yourself from catastrophic losses.
Makes sense. This reminds me of another fascinating aspect of Richie's story, his take on the Hunt brothers' attempt to corner the silver market.
Oh, yeah. He challenges the common narrative, suggesting that most traders who profited from it got in early and rode the entire wave rather than perfectly timing the top.
Interesting. So it's a reminder that market events are often more nuanced than they appear, and there are often multiple perspectives on what happened and why.
Exactly. It's about being willing to question the prevailing wisdom and look for those alternative explanations. And Richie's entire story has this great takeaway for all of us. Success in any field often involves recognizing when your initial approach isn't working, adapting to new information, and being open to new opportunities.
It's about having the flexibility to change course when needed, even if it means abandoning a path you've invested a lot of time and energy in.
You got it.
Okay, so we've covered information flow, personality, risk management, and adaptability.
You've covered a lot.
Is there anything else we're missing in this trader's toolbox?
Well, there's one more crucial element we haven't touched on yet. The ability to learn from your mistakes. And for that, we need to meet Victor Sperandeo, a trader known for his incredible ability to avoid losses.
Avoid losses. That sounds almost impossible in the world of trading.
It does, doesn't it? But Sperandeo has this unique perspective. He sees the market like a living organism with different stages, requiring different approaches. He's incredibly disciplined and has this remarkable ability to detach himself from the emotional roller coaster of the market.
So instead of getting caught up in the euphoria of a winning streak or the despair of a losing streak, he's able to maintain a level head and make rational decisions.
Exactly. And he has this fascinating story about going long the market in December 1974. He was absolutely right about the direction the market was headed.
So he made a killing, right?
Actually, no. He ended up losing money on the trade.
Wait, how is that possible? If he was right about the market direction, shouldn't he have made a profit?
You'd think so, wouldn't you? But this is where the importance of having a clear exit strategy comes in. Even when you're right about the market direction, you can still lose money if you don't have a plan for when to get out.
So it's not enough to just be right. You have to be right at the right time and know when to take profits or cut your losses.
Exactly. And Sperandeo's story perfectly illustrates the importance of having a well-defined trading plan, even when it feels like you have a sure thing.
I'm sensing a theme here. All of these traders have a system, a set of rules they follow religiously. It's not about luck or intuition. It's about discipline and having a clear plan of action.
You're absolutely right. And Sperandeo takes this one step further. He believes that trading, unlike many other professions, forces you to confront your errors. You can't hide from your mistakes in the market.
That's true. Every trade has a clear outcome, either a profit or a loss. There's no room for ambiguity.
Exactly. And Sperandeo believes that this constant feedback loop is crucial for learning and improvement. He says that the ability to admit mistakes and learn from them is one of the key traits that separates winning traders from losers.
It's not about being perfect. It's about being willing to learn from your imperfections.
Precisely. And this ties back to something we discussed earlier, self-awareness. Successful traders are constantly evaluating their performance, identifying their weaknesses, and seeking ways to improve.
It's like they're their own toughest critics, but in a constructive way.
Exactly. And Sperandeo's experience training other traders really highlights this point. He worked with 38 traders over a 5-year period, and only 5 of them succeeded.
Wow, that's a pretty low success rate. What separated the winners from the losers?
Well, according to Sperandeo, it wasn't necessarily intelligence or market knowledge. It was their mindset, their ability to manage their emotions, and their willingness to learn from their mistakes.
Self-awareness, emotional discipline, the ability to learn from setbacks, those are essential skills for success in any field.
Absolutely. And that's what's so fascinating about these market wizards. They're not just teaching us about trading, they're teaching us about life.
Okay, before we move on, I have to ask about something that really caught my eye in the book. There's this whole section about hypnosis and NLP being used to improve trading performance.
Oh yeah, Dr. Van Tharp.
Why?
He's a psychologist who believes that subconscious beliefs can have a profound impact on trading success.
Subconscious beliefs? You mean like those little voices in our heads that tell us we're not good enough or that we're going to fail?
Exactly. And Tharp uses hypnosis and NLP to help traders identify and reprogram those negative beliefs. He believes that our subconscious mind is constantly influencing our decisions, even if we're not aware of it.
So if you're carrying around a lot of baggage from past failures, or if you have deep-seated doubts about your ability to succeed, those beliefs could be sabotaging your trading even if you have a solid strategy.
Exactly. And Tharp shared this really compelling case study about a trader who had been incredibly successful for over 30 years, but suddenly started losing six-figure amounts every month.
Oh, wow. I can't even imagine the stress and self-doubt that must have caused.
It was devastating for him.
Right.
But through hypnosis, Dr. Tharp discovered that the trader's losing streak coincided with his divorce.
Interesting.
And it turned out that his subconscious beliefs about himself and his ability to succeed were being negatively impacted by the breakup. It wasn't his trading strategy that was failing, it was his mindset.
So his subconscious mind was essentially sabotaging his trades without him even realizing it.
Precisely.
Yeah.
And once he became aware of these underlying beliefs, he could start to address them. Dr. Tharp uses a combination of hypnosis, NLP, and other techniques to help traders identify and reprogram those limiting beliefs.
It's like rewiring your brain for success.
Exactly. And he emphasizes the importance of stating goals in positive terms, making sure they are personally meaningful, and visualizing the desired outcomes vividly. It's about aligning your conscious and subconscious minds for peak performance.
Makes sense. If your subconscious mind is constantly whispering doubts and fears, it's going to be hard to make clear and confident decisions, whether you're trading stocks or negotiating a business deal.
Absolutely. And Dr. Tharp's work shows that we can actually change those subconscious programs and create a more supportive internal environment for success.
I'm starting to think that psychology is just as important as technical analysis when it comes to trading, maybe even more so.
It plays a huge role. And that's what makes it so fascinating. These market wizards aren't just sharing their trading secrets, they're giving us a glimpse into the inner workings of the human mind and how our thoughts, beliefs, and emotions shape our reality.
This is pretty deep stuff.
It is.
Okay, I'm definitely intrigued. What else does Dr. Tharp have to say about the psychology of winning traders?
Well, he believes that successful traders often have clear mental strategies, or what he calls sequences of internal representations that lead them to winning trades.
Sequences of internal representations. Okay, break that down for me.
It's a fancy way of saying that they have a specific mental process, a series of thoughts, images, and feelings that they go through before making a trade. And these sequences are often programmed into their subconscious mind through years of experience and repetition.
So it's like they've developed a mental routine, a pre-trade ritual that helps them get into the right mindset and make decisions aligned with their trading strategy.
Exactly. And Tharp believes that we can actually train our subconscious mind to develop these winning sequences through techniques like visualization, affirmation, and hypnosis.
It's like rewiring your brain for success.
Precisely. And it's not just about trading. This principle can be applied to any area of life where we want to improve performance or achieve specific goals.
So if we want to be more successful, we need to pay attention to our thoughts, beliefs, and the mental routines we're running in our subconscious mind.
Absolutely. And that's a pretty powerful insight.
It really is. It's making me rethink my entire approach to goal setting and decision making.
It's definitely a lot to unpack, but it's well worth the effort. And you know what? That's just the tip of the iceberg. We've only just begun to explore the fascinating world of these market wizards.
Okay, I'm hooked. Let's dive into some more of these incredible stories and see what other gems of wisdom we can uncover.
You know, it's fascinating how these traders approach the market from such different angles. We've seen the analytical side, the psychological side, and now we're about to meet someone who found success in a market most people wouldn't even consider municipal bond funds. Does that sound exciting or what?
Municipal bond funds. Honestly, it doesn't exactly scream high-stakes trading action to me. It's more like watching paint dry.
Right.
Convince me why I should care.
Well, that's exactly why Gil Blake's story is so remarkable.
Hmm.
He saw opportunity where others saw only predictability and stability. It's a good reminder that sometimes the greatest profits are hidden in the most unexpected places.
Okay, you've piqued my curiosity. Where did this guy come from? Did he have some insider knowledge of this whole municipal bond market?
Not really. His background was actually in engineering and computer science. He kind of stumbled into trading while working at a bank, analyzing these municipal bond funds for potential arbitrage opportunities.
Arbitrage opportunities, is that like finding those price discrepancies you sometimes see on different exchanges?
It's similar, but in this case, Blake noticed this tendency for municipal bond funds to continue moving in the same direction after an initial price change, almost like they had momentum that defied the usual expectations of random price fluctuations.
So it's like if a fund went up a penny one day, there's a good chance it would go up again the next day. Is that enough to actually make money?
Believe it or not, that seemingly small edge was enough for Blake to build a highly successful trading strategy. He called it the one penny rule, and he found that it had an 83% probability of working. And he didn't limit himself to just municipal bond funds. He applied the same principle to other sectors, particularly those with higher volatility like biotech and gold.
So this guy turned what most people considered a sleepy corner of the market into a gold mine. That's impressive. But it makes you wonder if this one penny rule was so effective, why didn't everyone else catch on?
Well, a few reasons. First, it required a lot of data analysis and a deep understanding of the specific characteristics of each market. Second, most people were focused on more glamorous or high-profile trading strategies. And third, Blake understood the importance of limiting his trading size to avoid disrupting the very patterns he was profiting from.
So it's not just about finding an edge, it's about exploiting it in a way that doesn't kill the goose that lays the golden egg, so to speak.
Exactly. And that leads us to another interesting point about Blake's story. He eventually started managing money for individual clients, and he offered them this truly unique guarantee. He shared 25% of both profits and losses with his clients, and even guaranteed to cover 100% of any losses after 12 months.
Wow, that's a level of confidence you don't see every day. He must have been incredibly sure of his methods to offer that kind of guarantee.
He was. And it speaks to his integrity and his commitment to aligning his interests with those of his clients. It's a refreshing contrast to the eat what you kill mentality that often prevails in the trading world.
It definitely is. Now, we've talked a lot about finding an edge managing risk and the importance of psychology. But what about the emotional side of trading? How do these traders deal with the inevitable ups and downs of the market?
That's a great question. And it brings us to Tom Basso, a trader known for his remarkable serenity, even in the face of market turmoil.
Serenity. Isn't that kind of the opposite of what you'd expect from a trader? I mean, you're constantly dealing with risk uncertainty and the potential for huge losses. How do you stay calm in that environment?
Well, Basso has this unique perspective. He often compares life to a movie, emphasizing the importance of enjoying the present moment and not getting too caught up in the ups and downs of the plot. He believes that the key to happiness is to focus on the process, not the outcome.
So instead of obsessing over every trade, he's taking a more detached view, almost like an observer watching a film unfold. That's an interesting way to frame it.
It is, and it helps him maintain perspective. He has this great story about the Gulf War. On the night the U.S. launched the air war against Iraq, crude oil prices spiked. Basso had this substantial long position and could have easily gotten swept up in the frenzy. But his first thought wasn't about potential profits. He was more concerned about managing the volatility and making sure his team was prepared for the market turmoil that was sure to follow.
So even in the midst of a major global event with potentially huge financial implications, he's staying focused on the bigger picture and not letting emotions dictate his actions.
Exactly. And that speaks to his discipline and his commitment to his risk management principles. He wasn't going to let greed or fear cloud his judgment.
That's a powerful lesson. It's so easy to get caught up in the emotion of the moment, especially when money is on the line. But Basso reminds us that clear thinking and a disciplined approach are essential for navigating those high-stakes situations.
He also emphasizes something that we haven't really touched on yet, the importance of investment psychology. He actually believes it's the most important element of trading success, followed by risk control. The actual buying and selling decisions come last.
So it's not just about having a winning strategy, it's about having the mental fortitude to execute that strategy consistently, even when you're facing losses or self-doubt.
Exactly. It's about mastering your mind before you master the market. And speaking of mastering the market, are you ready for a rapid-fire tour of some other fascinating traders?
Bring it on, I'm all ears.
Okay, first up we have Linda Rashka, a highly successful short-term trader who emphasizes pattern recognition and discipline. She actually started out observing traders on the floor of the Pacific Coast Stock Exchange before taking the plunge herself.
So she learned by watching the masters at work, kind of like an apprentice studying under a seasoned craftsman?
Exactly. And what she realized is that short-term market movements, much like weather patterns, can be predicted with a high degree of accuracy if you know what to look for.
That's a bold claim. Isn't the market supposed to be unpredictable?
It is to a certain extent. But Rafka believes that there are underlying patterns and cycles that repeat themselves. And if you can identify those patterns, you can gain an edge. She's actually known for aiming to be profitable every single day.
Wow, that takes serious skill and focus. I can barely plan my day, let alone predict the market every 24 hours.
Next, we have Blair Hull, the founder of a multi-million-dollar trading firm called the Hull Trading Company.
Whole Trading Company, that name rings a bell. Weren't they known for being really tech-savvy, like pioneers in using computer models for trading?
You got it. His firm was famous for its sophisticated use of computer models and its ability to exploit arbitrage opportunities in the options market.
So instead of relying on gut feeling or traditional technical analysis, he was crunching numbers and letting the algorithms guide his trades.
Precisely, Hull believed that the market's pricing of an asset is the best measure of its true value. He wasn't trying to outsmart the market. He was simply looking for mispricings and capitalizing on them.
It's a very data-driven approach, relying on quantitative analysis to identify opportunities, kind of like a scientific approach to trading, wouldn't you say?
Absolutely. And it was incredibly effective. Hull Trading Company became one of the most successful trading firms in history, eventually being acquired by Goldman Sachs for a hefty sum.
Okay, so we've got the pattern recognition expert, the computer model guru. Who else is in this lineup of trading titans?
Well, buckle up because this next one is a bit unexpected. We're talking about a professional blackjack player who applies probability theory and money management principles to beat the house.
Hold on, a blackjack player. What does that have to do with trading?
You might be surprised. This guy was part of a team of card counters that took Las Vegas casinos for millions. And the principles he used to beat the house probability, risk management, and discipline are directly applicable to the financial markets.
So it's not about luck or intuition. It's about having a mathematical advantage and the discipline to execute a winning strategy consistently.
Exactly. He talks about something called the Revere Advance Point Count, a sophisticated method for tracking the ratio of high cards to low cards in the deck. By knowing the composition of the remaining cards, he could adjust his bets and gain an edge over the casino.
That's pretty clever. But how did he transition from blackjack to trading? Did he just start betting on stocks like they were cards?
Not quite. He eventually applied the same principles of probability and risk management to option trading. He realized that the options market, like a deck of cards, had certain statistical properties that could be exploited with the right approach. He was essentially looking for mispricings, just like he did at the blackjack table.
So it's a reminder that the principles of successful trading can be applied across different domains. It's about understanding the underlying dynamics of a system and finding ways to exploit inefficiencies or gain a statistical advantage.
Pretty cool, right? Definitely. And that brings us back to Dr. Van Catharp and the power of hypnosis and NLP in improving trading performance. We've already touched on the idea that subconscious beliefs can sabotage our success. But Dr. Tharp goes even deeper, exploring how we can reprogram those beliefs and develop a winning mindset.
Yeah, the subconscious mind is a powerful force, isn't it? It's like an iceberg.
Yeah.
Most of it is hidden beneath the surface, but it can have a huge impact on our thoughts, feelings, and behaviors.
Exactly. And Dr. Tharp believes that we can actually tap into the power of our subconscious mind to improve our trading performance. He shares this fascinating case study of a trader who had been incredibly successful for over 30 years, but suddenly started losing six-figure amounts every month.
That's got to be a nightmare scenario. Imagine being at the top of your game for decades and then suddenly everything falls apart. What happened?
It turned out that the onset of his losing streak coincided with his divorce. And through hypnosis, Dr. Tharp discovered that the trader's subconscious beliefs about himself and his ability to succeed were being negatively impacted by the breakup. It wasn't his trading strategy that was failing. It was his mindset.
So his subconscious mind was essentially sabotaging his trades without him even realizing it.
Precisely. And once he became aware of these underlying beliefs, he could start to address them. Dr. Tharp uses a combination of hypnosis, NLP, and other techniques to help traders identify and reprogram those limiting beliefs.
It's like rewiring your brain for success, right?
Exactly. And he emphasizes the importance of stating goals in positive terms, making sure they are personally meaningful and visualizing the desired outcomes vividly. It's about aligning your conscious and subconscious minds for peak performance.
That makes a lot of sense. If your subconscious mind is constantly whispering doubts and fears, it's going to be hard to make clear and confident decisions, whether you're trading stocks or negotiating a business deal.
Absolutely. And Dr. Tharp's work shows that we can actually change those subconscious programs and create a more supportive internal environment for success.
I'm starting to think that psychology is just as important as technical analysis when it comes to trading. Maybe even more so.
You're not wrong.
Yeah.
And there's one more story I want to share that really highlights the power of mindset and a systematic approach. It involves a trader named Curtis Faith, who was part of the legendary Turtles experiment. You ever heard of the turtles?
Wait, the turtles, I think I have. Wasn't that some kind of experiment where a bunch of ordinary people were taught to trade like a real-life Wall Street version of trading places?
You got it. It was this famous experiment conducted by Richard Dennis, a highly successful trader who believed that anyone could be taught to trade successfully. He recruited this group of people with diverse backgrounds, gave them a simple set of trading rules, and let them loose in the markets. They even called themselves the Turtles because Dennis had this idea that he could grow traders as easily as turtles in Singapore.
And it actually worked. These everyday folks turned into trading superstars.
It did. The Turtles went on to make millions, proving that successful trading can be learned. And Curtis Faith's story is particularly interesting because he started out as a game designer with no prior trading experience.
So he went from designing games to playing the ultimate game, the financial markets. That's an awesome story.
It is. And he emphasizes the importance of having a well-defined method, managing risk effectively, and developing the discipline to follow your rules consistently, even when you're facing losses or self-doubt.
It's a great example of how anyone, regardless of background, can achieve success in trading if they have the right mindset and approach. But it's not just about trading, is it? These principles apply to any field where you're dealing with risk uncertainty and the need for disciplined decision-making.
You're absolutely right. And I think that's one of the most valuable takeaways from these market wizard stories. They're not just about trading, they're about life.
Okay, so we've met a bunch of these incredible traders, each with their own unique approaches and insights. But what does it all mean? How do we take all this wisdom and apply it to our own lives?
That's a great question.
Hmm.
And I think that's where the real power of these stories lies.
I'm ready to connect the dots. Let's see what we've learned from these market wizards. Okay, so we've met all these incredible traders, each with their own unique approaches and insights. But what does it all mean? How do we take all this wisdom and turn it into something actionable, something we can use in our own lives?
That's the million-dollar question, isn't it? And it's not always easy to distill these complex stories into simple takeaways. But I think one thing that really jumps out is the sheer importance of psychology. These traders, they're not just number crunchers, they're masters of their own minds.
You know, you're absolutely right. We've seen how they manage fear, greed, self-doubt, all those emotions that can totally derail even the best laid plans. It's like they've developed this mental armor to protect themselves from the inevitable ups and downs of the market.
Exactly. And it's not just about controlling emotions, it's about understanding how they influence our decisions. Remember William Eckhart, the mathematical trader? He believed that our natural instincts often lead us astray because we tend to overreact to both gains and losses.
Right. We get caught in this emotional feedback loop, chasing wins and trying to avoid losses, which can lead to some pretty impulsive and irrational decisions.
Precisely. And that's where discipline comes in. All of these traders, regardless of their specific strategies, have this incredible level of discipline. They have well-defined trading plans, and they stick to them, even when it's tempting to deviate.
It's almost like they're playing a game with a set of rules, and they know that breaking those rules is a surefire way to lose. But it's not just about following rules blindly, is it?
No, it's about understanding the why behind the rules. It's about having a clear rationale for your decisions and being able to articulate your thought process. That way, when the inevitable challenges arise, you can stay grounded in your principles and avoid making emotional decisions.
That makes sense. It's like having a North Star to guide you when the seas get rough. But even with the best navigation tools, sometimes you run into unexpected storms, right?
Absolutely.
Right.
And that's where risk management comes in. These traders are incredibly careful about managing their exposure to potential losses. They set stop-loss orders, diversify their portfolios, and never bet more than they can afford to lose.
It's like they're constantly playing devil's advocate with themselves, asking, what could go wrong and how can I minimize the damage if it does?
Exactly. And that kind of thinking can be incredibly valuable in any area of life. It helps you identify potential risks, develop contingency plans, and avoid making decisions that could lead to catastrophic outcomes.
Okay, so we've got psychology, discipline, risk management. Is there anything else we're missing from this trader's toolkit?
Well, there's one more crucial element that we've seen play out in all of these stories, the ability to adapt and learn from your mistakes. Remember Mark Ritchie, the former divinity student turned soybean trader?
Oh yeah, the guy who bought that useless data on perpetual contracts and had to pivot to soybean crush trading.
Exactly. Yeah. He's a great example of someone who was able to adapt to new information, change course when necessary, and even embrace new opportunities that he hadn't initially considered.
And he wasn't afraid to admit when he was wrong. That takes a certain level of humility, doesn't it?
It does. And it ties back to what Victor Sperandeo said about trading forcing you to confront your errors. You can't hide from your mistakes in the market. Every trade has a clear outcome, a profit or a loss.
And that constant feedback loop, while it might be painful at times, is ultimately what drives learning and improvement.
Exactly. It's about embracing those setbacks as opportunities for growth.
Hmm.
It's about asking yourself, what can I learn from this experience? How can I do better next time?
So it's not about being perfect, it's about being a perpetual student, always seeking to improve your skills and knowledge.
Exactly. And that brings us back to something we discussed earlier,
Yeah.
the power of self-awareness. These traders, they understand their own strengths and weaknesses. They know what kind of trading style suits their personality and they stick to it.
They've learned to manage their emotions, effectively avoid making impulsive decisions, and stay disciplined even when the market is testing their resolve.
Right. It's about being honest with yourself about who you are, what you're good at, and where you need to improve. And that's a journey that never really ends, is it?
No, it's a constant process
Yeah,
of self-discovery and refinement. But that's what makes it so exciting, isn't it? The idea that we can always learn and grow, even from our mistakes.
absolutely. And I think that's one of the most valuable lessons we can learn from these market wizards. They're not just teaching us about trading, they're teaching us about life.
So as we wrap up this deep dive, what's the one piece of advice you would give to someone who wants to apply these principles to their own life?
I think it all boils down to this: cultivate a mindset of continuous learning, self-awareness, and disciplined action. Embrace challenges as opportunities for growth. Don't be afraid to experiment, to make mistakes, and to learn from them. And most importantly, never stop asking yourself, how can I do better?
That's fantastic advice. And it's a reminder that the journey to mastery, whether in trading or any other field, is an ongoing process. It's not about reaching a destination. It's about the journey itself.
Well said. And who knows, maybe one day we'll be reading about your success story in a book like The New Market Wizards.
Huh. Maybe one day. But for now, I'm just grateful for the opportunity to learn from those who have paved the way. It's been an incredible journey, and I can't wait to see what other insights we uncover in our future deep dives.
Me too. Until next time.